Well, thanks for staying with us here on The Real Story. Between inflation and the recent bank collapse, the largest since 2008, the 2008 financial crisis, fear of a recession and distrust right now are rampant across the country. But there's an important official here in Connecticut that's responsible for economic accountability and opportunity here. State Treasurer Erick Russel is here in studio with us. Thank you so much for coming in studio. The last time we had you on, it was right before the election, so congratulations on your position.
Thank you. Very happy to be here.
Okay, so first of all, and I get even confused by this, can you just remind us and tell everyone what exactly the state treasurer does?
Sure. So the Office of the Treasurer is very broad. It's first and foremost responsible for managing our pension funds, protecting state and municipal employees and teachers and retirees, and responsibly managing our portfolio, which is about $48 billion right now. We're also responsible for all of the cash management, so cash flowing in and out of the state every day, our debt management program, all of our bonding and financing of critical infrastructure across the state, but also investing in the long term in our state, thinking about our 529 college savings programs and things like ABLE, which allow families to save for those who are living with disabilities. So the role is very broad. Unclaimed property is another big one that is often talked about.
Yep.
Making sure that we're getting money in the back in the hands of rightful owners. And so very broad, a lot of opportunity to do really good work. I think that really will help residents in the state and ultimately save taxpayer dollars, which is the most important.
Okay. Well, let's talk a little bit about the bank collapse here, because
Sure.
It's on a lot of people's minds. And you have a background, you're an attorney. We were also just talking, though, you were in the financial services industry, so you're well versed on all of this. But this Silicon Valley Bank that lent to a lot of the startups and everything, obviously it went under. Are you concerned about other regional banks here in Connecticut? What is the potential impact, if there is any, on what we saw happen?
Sure. So I think what is critical here is with President Biden and the federal government stepping in and really protecting depositors, knowing that at the end of the day, even with the collapse of Silicon Valley Bank and Signature, that individuals' money is going to be safe, I think has really helped to quell a lot of these concerns across the industry. I think my biggest concern was the contagion of feeling like this may spread further, and there being panic in the market because of that. And I think we've seen that start to level off quite a bit. I think it's also important when we're thinking about these banks specifically that they were really focused on a very specific type of client, which is ultimately was one of the main drivers leading to this. And so I think with what we've seen from the federal government, I think we've seen things start to level off. From a state perspective, and particularly for my office when thinking about our pension funds, really all of our kind of investment side things that would be impacted have been through passive investment on our end, and we aren't seeing any material impact on the pension funds because of this. Okay,
so you feel like there's not going to be a large impact as of right now on what happened with anything here in Connecticut, really?
Well, I will tell you, I mean, it's certainly we're monitoring this very closely to make sure that we are protecting our state's assets and that we are prepared to make any changes that we would need to. But as a whole, I don't think that, I think we're in a spot that folks should feel really safe about where their money is being held.
Yeah, so you think, and that was going to be kind of one of my questions, you feel like our banking system is healthy as it stands right now?
Yes, and I think a lot of this is also the changes that we've seen in the wake of previous collapses, right? Is that federally we've done a lot of work to make sure that we're preventing things from happening. Don't get me wrong, I think that this specific situation are things that are very going to be looked at very closely to make sure that we're preventing collapses like this in the future. But as a whole, I think that we are in a much better place than we've been looking at previous collapses.
We know that, it's kind of a rocky time right now with Wall Street, with inflation, with anything financially. It feels a little bit like this. What's your advice to people when looking at our state's finances and the impact that could have, whether we go into a recession or not?
Yes, we certainly need to be prepared for it, and I think we've done an incredible job as a state of really righting the ship in so many ways. We have been dealing with long-standing fiscal issues as a state, but over the last many years, we have made huge strides in that department. It's why we've been so committed to protecting our rainy day fund, which is full right now at upwards of $3 billion. We've paid down significant debt, particularly pension debt. over the last few years, an additional $6 billion of unfunded liabilities paid down. And the reason it's important is we have the ability to withstand any volatility in the market, and we're just in a much better place fiscally than we've been. And you've seen these continued surpluses year over year, which have allowed us to make investments in our state, but also bring down a lot of our fixed costs, which are freeing up monies in the budget. And so I think we are in a really good spot. I think we need to remain vigilant. Obviously, on the pension side, we're, as long-term investors, the importance here is having a diversified portfolio so that we're able to withstand volatility in the market and withstand this inflationary environment. And so I think we're in a very good spot.
That's good. Okay, so let's talk about the baby bonds program. You were speaking about this last week, and from my understanding, I know former Treasurer Wooden was the one, Sean Wooden was the one who kind of really got this program up and running, but it wasn't funded by the legislature, right? So the legislature passed it. Explain the program and what you need from the legislature at this point.
Sure. So the program itself is essentially $3,200 would be invested in a trust account managed by the Treasurer's Office for every child born into poverty. And in Connecticut, that's about 15,000 children every year. And that money would grow over the life of that child, and between the ages of 18 and 30, that individual would be able to make a claim for that money, which we expect to be between $11,000 and $24,000, to use for a cause that it essentially is about helping to build wealth. So being able to use those monies to pay for post-secondary education, to buy a home here in Connecticut, to start or invest in a Connecticut business, or to help save for retirement. And the real goal is to address poverty. We are one of the wealthiest states in the country, and we have one of the largest wealth gaps in the country. And we, again, have made these huge strides in really addressing our overall fiscal health. This is a great opportunity for us to make these long-term investments in really addressing some of the more systemic and structural issues that we have when it comes to wealth and poverty in our state. So where we are right now, the legislation was passed in 2021. The program is set to be and was passed to bond for the program over 12 years.
Yep.
And we've had conversations. The governor's office, I believe, has kind of taken the position that they don't want to bond for the full program.
Okay.
So we've been in conversation with the governor's office, with the legislature, about looking at other ways to fund the program or some combination of funding streams. And so we've had really productive conversations. We're working to make sure the program is ready to implement on July 1st when it is set to roll. And we're really excited about getting it done. So it's been really productive.
But still, the funding, you need it by that. You need it by July 1st, or you need it by a certain date before July?
So our plan is to make sure that we have commitments for the program. It is set right now. The bonding of the program was set to start as of next year,
Okay.
but we intend to have funding set up and structured for the program to be fully implemented this July.
Okay. How important is a program like this?
It's critical. It's critical, and I think especially when you look at where we are as a state right now, again, we are in a position to make some of these longer-term investments. We've seen the wealth gap and disparity in our state grow year over year over year. And this is a program that is ultimately about again, addressing some of these systemic issues rather than letting these issues fester. It's also a huge economic driver for our state. When you have people who have to live in and have to reside in Connecticut in order to benefit from the program, it's incentive for people to stay here, to grow their families, to work here in Connecticut. And you know that all of this money is being reinvested right back into the economy. And so I think the program is critical. We understand that this is a piece of a much larger puzzle when you combine education and access to quality and affordable childcare and workforce development and all of these other wraparound services. But the program really can be a huge vehicle for that.
And there's an element that's financial literacy in there, right? Where to access the money, you have to take some kind of course?
Absolutely. So to access you have to finish the financial literacy course, which would be administered through our office, and you have to live in Connecticut when you are claiming proceeds from the program as well. And so we obviously do a lot of work in the office on financial literacy more broadly.
Yep. Yeah, you were just doing something with it last week, right?
Exactly. We were, well, yeah, and even yesterday we were over at Windsor High School speaking to students there who have a personal finance course as a requirement for graduation. And you know, these are skills that young people are going to use every single day in managing their own finances and their family's finances. And so I think all of these things together really will put us in a place where we have a more educated citizenry who are working on improving finances and understand how this all works. So.
Right. Okay. State Treasurer Erick Russel, great to have you on the program.
Thank you. So
Thanks
happy to be here.
Thanks for joining us.
Thank you.
All right, that's going to do it for us here on The Real Story. If you want to watch these segments again, you can head to fox61.com and download the Fox 61 app and watch The Real Story every Sunday at 10 a.m. right here on Fox 61 and streaming on Fox 61 Plus. Have a great morning.